Are you getting ready to start the home buying process, or maybe you're just curious how a mortgage loan works? Either way, we're here to help you. Hi, I'm Leighton Walsh, Mortgage Services Manager at First Keystone Community Bank. Unless you're paying cash for a home, you'll likely need a mortgage. Whether you're a first-time home buyer or just looking to move into a new home, we're here to help you. The mortgage process can be broken down into 8 steps. The first step actually starts outside of the bank. We know, a banker telling you to create a budget. How original. You should get serious to create a budget to see what you can afford. Sometimes it's better to focus more on your monthly payment you're comfortable with versus the maximum purchase price that you can do. You can head to our website to use our mortgage calculator to help. Just choose Calculate For, Total Monthly Payment, to get some ideas. When you focus on a maximum monthly payment versus a maximum purchase price, you can take into consideration the other things in your life that might have payments. Once you have sorted out a budget that you feel comfortable with, the next step is to set up a meeting with one of our First Keystone mortgage loan consultants to get a pre-qualification. During the pre-qualification process, we will ask you a series of questions, including your name, social security number, date of birth, where you're employed, estimated gross monthly or yearly income, and ultimately do a credit check. Getting pre-qualified for a loan is a good idea because it not only gives you an idea as to what you can afford, but also when going to look for a home, many realtors ask for you to be pre-qualified before going to see a home that you might be interested in. After you've been pre-qualified, the real fun begins. House hunting. This is where you go with your realtor to look at homes that you might be interested in. After visiting homes with your realtor and finding one that you're interested in, you then place an offer. Once your offer is accepted, that's when you'll get the signed sales agreement and you would come back to the bank to start the mortgage loan application process. After your offer is accepted, the next step is typically a home inspection. Some mortgage loan products require a home inspection and others make this optional. A thorough home inspection gives you important details about the home beyond what you may be able to see on the surface. Now that you've found your home, it's time for you to start to make your official loan application at the bank. During this time, our mortgage loan consultants may ask you for additional information that might include pay stubs, bank statements, and any other information that might detail where your down payment and closing cost money will come from. Also during this time, we will do a credit report to make sure that the credit is still in line as it was during the pre-qualification process. Upon completing the loan application, the mortgage loan consultant will provide you with a loan estimate. The loan estimate is a very important document for you to review. It includes things such as your loan amount that you're applying for, your interest rate, the term of your loans, and estimated costs that might be associated with the loan, to include things like appraisal cost, title insurance, recording fees, and origination fees. If you have any questions on any of these items in your loan estimate, please do not hesitate to ask your mortgage loan consultant to explain anything further. The bank's underwriting department will primarily focus on the 3 C's of the mortgage process. Capacity. Do you have the funds to pay for your loan? Credit. Does your credit history show that you pay your debts on time, and including your existing debt, you have enough money to make your new mortgage payment? Collateral. Does the appraisal show that the purchase price and home value are aligned? Prior to your closing date, you will receive a document called a closing disclosure. The closing disclosure details everything of your entire mortgage loan transaction. This includes your loan amount, your interest rate, your total monthly payment of principal and interest, as well as taxes and insurance if you are choosing to escrow. It will also show your final closing costs as far as recording costs, title insurance, appraisal fee, credit report, and any other costs associated with the mortgage. We like to think of the closing disclosure as one big receipt for the entire transaction. Finally, you've made it to closing day. Stretch your hands and prepare to exercise your signature. At the closing table, you will be asked to sign multiple documents, the closing disclosure included. You will have received this prior to closing, so you will have had plenty of time to review it, I encourage that if you do have questions upon receiving the closing disclosure, to reach out to your mortgage loan consultant even prior to closing, so that way they have time to answer any questions that you might have. If everything is in order, you'll sign all the documents, and just like that, you're a homeowner. Now that the closing is over, the celebration can begin. You finally own a home. At this time, all the papers have been signed, the money has been handed over, and will be dispersed properly from the title company. And that's it, the mortgage process in 8 steps. Hopefully this explanation has given you an idea as to the inner workings of the mortgage process. Don't hesitate to contact us with any specific questions that you may have. You can visit our website at www.fkc.bank or call us at 570-752-3671. We're here to help simplify the mortgage process. We're here to get you home.